When is the real estate market going to crash? Listen, if you want to understand how markets work, it's a lot easier than you might know. And in this short video, I'm going to teach you everything that I know so that you can better understand how to time your real estate in the market. What is a home really worth? Well, it's actually worth what someone is willing to pay for it, which means that as the market goes up and down, real estate market would go up when people's perception says, I'll pay more for that. And the market goes down when people say, I don't want to pay for that. But you know, there's actually a market force behind that that is so much bigger. And that market force is called population. It's basic economic principles of supply and demand, probably like you learned in college and high school. Supply and demand essentially means that when there's too many people and not enough houses, the market has to what? It has to go up. And when you don't have enough people, but you have too many homes and no one can buy them, guess what happens to the market? The market goes down. Notice it's not erratic like the stock market. Stock market is crazy confusing. It corrects itself every 8 years. Real estate corrects itself every 15 to 20 years. We've been tracking this cycle for 3,000 years. It's called the K-wave or Kondratiev cycle. And I'm going to break it down for you right now because if you want to get out there and learn how to hustle and make money in real estate, I will show you and mentor you how to make money when the market is up, when the market is down, when the market is flat. It is always a good time to buy if you understand these principles right now. Real estate over time does what? You're right. It goes up in value. And as it's going up, it really doesn't look like this. I mean, real estate probably more realistically looks like this. And what that means is that you've got moments where the market is running high. You got markets where the market is running low. What would you call everything below the line? This is what's called a trough. And when the market comes down, it must go back up. So what do we call this? You're familiar with the name? It's called a bubble. Now, eventually, if you get caught at the wrong time with the wrong real estate and you're in a bubble, you can lose your shorts. I don't even know where that comes from. Like you become, I guess you can't afford shorts, but maybe a shirt, maybe like a nightie. Makes no sense. Anyway, bottom line is that if you do real estate the wrong way and you don't time things the right way, then you can actually get into really, really big trouble. So here's a couple of things that I do to keep myself safe. First of all, let's understand supply and demand because I really want you to get this. First of all, when the market is headed down, what does this mean? This means, I'm just going to say that population is low and houses are high. Does that make sense to you? Not enough people to buy a house. A home is only worth what someone's willing to pay. Boom, that drops. No one's willing to buy it. But what do you call it when the market is on the rise? When we're forming our bubble, when the market's going up, this is because population is high and houses are low, which means, you know, if you don't build for 5 or 7 years like what happened after 2008, guess what happens? People don't stop making babies. In fact, when the economy's bad, people got extra time on their hands. People are making babies. It's a little joke there. And so when people are out there making babies and population's expanding, population's growing, immigrants are moving in, and all of a sudden population's on the rise, but you're not building, guess what it does? It forces the economy to correct itself because all these people now say, hey, remember when the market dropped and the real estate value went down and no one was there to buy it? You wait a few years. The market will always correct itself as long as population for a given area is on the rise. Now, in many parts of the world, economic winter happens when people are not making enough babies to replace themselves. And in places like Japan, parts of Europe, we're actually having a severe problem where entire areas are being abandoned. In places like the United States, for example, not currently an issue, not a problem. This is still a place of the American dream. People want to live here no matter who our president is. So market goes down, market goes up. Now that you understand this, how do you insulate yourself? This part's really important. If you buy $1 million home, this vacillation is going to be extreme. But if you buy a home under the median, like that average price for an area, $200,000, $230,000. If you're buying in my range, $100,000, $200,000, guess what? This market, it's still moving up and down, but do you see how imperceptible that is? That's called a little bump in the road. Oh, value dropped $10,000. I'll survive. It's not, I lost $300,000 of value on my home. That's a big problem for a lot of people. Now, The cool thing is that if you understand this, it doesn't matter where you're at in the country, it doesn't matter where you're at in the economy. It means that we're buying real estate no matter what. And that's the cool thing about this whole plan is that if we're in a bubble, guess what I'm doing? I'm buying like crazy. When the market's flatlined, I'm buying like crazy. When the bubble bursts, I am buying like crazy. If there was a time when I was buying craziest, it would be when the market actually pops. Because last 5 years, my clients have made over $70 million from the homes I helped them buy during that period of time. It's a big deal. Now, where are we at in the market? When is the market going to crash? This is a really good question. Right now, I want you to understand that in the market, if you want to understand when the market will crash, you need to understand a term called rebuild value. Let's just say that the median home costs $220,000 to build. That is actually the hard cost on the commodity of the materials used, the concrete, the lumber, the bricks, the things that it took to actually build this thing. Well, when the market drops and no one's buying homes, someone did pay $220,000 to build that house. But you can now pick it up for, let's say, maybe in a really extreme scenario, $140,000 in a really bad market. In normal markets, maybe more like $200,000 or $210,000. It's not that volatile. I go to the places in the country where you have maximum volatility. They overbuilt way too much. Everything totally fell apart. So all of a sudden, you can't build this for less than $220,000, but you can buy it for $140,000. The opposite, that's how you know you're in a trough, in a bubble. When this $220,000 home is selling for $230,000, I got news for you. We're not in a bubble. They're so close to each other. But when this is like $280,000, guess what? We're most definitely in a bubble. I watch what it costs to build a home and what homes are selling for in relation to that statistic to help me understand where in the cycle are we? Are we moving up or are we moving down? And real estate never has a double correction. In other words, when the market goes up, it has to pop all the way before it comes all the way back up. It's slow, far more predictable than the stock market. And friends, I hope this video has been really helpful in really helping you understand the market, when it might crash again. As far as where I think the market is, we've got a short period of time, probably in years, before we've hit a full bubble where we need some kind of correction. Will the correction be as deep and as bad as 2008? No, that type of correction, every fourth correction is a really deep one. Last time we had that was Great Depression. And it's all speculative. I'm not an expert any more than anyone else that hasn't done hundreds of millions of dollars of real estate, and it's a guess. We're doing our best, though, from the principles that in hindsight, we always know how this looks. If I were you and you want to say, Kris, is now a good time to invest in real estate? Listen carefully. Yes. It's a very good time to be investing in real estate. I'm buying a lot of homes right now. It is time to be out there. If you want an expert to shepherd you and guide you through this process, if you have money sitting in a 401k IRA that you want to deploy in real estate, if you want training on how to do it yourself, click the link in the description below. After you subscribe, because you are a subscriber and you've rung the bell, correct? After that, click the link in the description. You're going to get lots of literature. Talk to a member of my team and say, hey, I want to know how to invest with Kris. I want Kris to mentor me, and you can actually see if you qualify for that to happen. I don't care how young or how old. I don't care if you got money or no money. I can show you your way to the very top. I hope to see you there.